Hi everyone, I'm Michael Reinking coming to you straight from the floor of the New York Stock Exchange with your weekly brief. As a reminder, this is for informational purposes only, and the NYSE does not recommend any investments or investment strategies. So today is the final day of March and the last day of Q1, and what a ride it has been. So the first 2.5 months of the year, we saw the biggest sell-off we've seen since the rally started 2 years ago, with the S&P 500 down about 15% at the lows. Once sentiment had gotten really negative, we've now seen a snapback rally over the last 2 weeks, and we're only down about 3.5% year to date. Now, the stocks that had underperformed to start the year have really led to the upside. We're looking at the growth factors outperformed value by about 7% over this last 2 weeks. Now, equity volatility has kind of got smashed over this same time period. The VIX has moved from the mid-30s back to around 20, but we're not seeing volatility in fixed income markets or commodity markets move lower yet. The ICE Bank of America Move Index is still above 100, and we've seen treasuries have one of the worst quarters on record. This is leading to some questions as to whether or not we could see a big portfolio rebalancing trades over the next few days. Now, oil prices have been all over the map this week. Last night there were reports that the Biden administration might release 1 million barrels per day from the SPR, and we're now looking at oil prices that are down around 5% on the day. This morning, OPEC Plus announced that it would move forward with its previously announced production increases, which was expected. Now, we had some big economic data this morning, which was largely in line with expectations. Personal incomes continue to move higher. We did see the spending numbers miss, but there was a big positive revision to last month's numbers, helping to offset that. And then, of course, the Fed's preferred gauge of inflation, PCE, was no worse than feared, with prices up about 6.4% on a year-over-year basis. Now, tomorrow, another big day of economic data. We have ISM manufacturing, Eurozone CPI, and then of course the employment report. And then next week's a little bit, continues to be a little bit slow. Earnings don't start for another 2 weeks. We have ISM services on Tuesday, but the big catalyst of the week is going to be the FOMC minutes on Wednesday. Chair Powell had suggested we would get some hints around what the balance sheet reduction process might look like at that point. And then, of course, the big question going into Final Four weekend is whether Coach K is going to ride off into the sunset on top, or whether his arch rivals are going to send him home early from the dance. Well, that's going to do it for this week. I'm Michael Reinking, and this has been your Weekly Brief.